Hey, it's time for a new week of Trader Talks, everybody. I'm glad that you are here with us. My name is Brent Moore, sitting in for Kevin Horner today. Today I'm joined alongside Ms. Rachel Deschelle. Glad to have you here, Rachel. How are you doing this morning?
I am doing great. It is sunny here in Greenville, South Carolina. How are you doing, Brent?
I'm doing good. We had some thunderstorms roll through last night here in the Salt Lake area, and my dog, who is terrified of thunderstorms, joined us in bed last night with a bunch of drool and frantic panting. So I didn't get the best night's sleep, but I'm glad to have a new week with everybody here today. So everybody, welcome. And let me just remind you, everyone, that you can follow us on X at Brent Moore's CS, at Rachel dash CS. I think I have that right. Is that correct, Rachel?
Yep, that's right. My name was too long.
Okay, makes it a little easier. And I'm glad you're here, Rachel. You know, everybody, Rachel's taking a little new role in the organization. You've seen her probably a few times here on, because she's been a kind of a regular on Trader Talks in Today's Market. But Rachel, tell us a little bit about your new role here at Charles Schwab.
Yeah, so now I've been blessed to join the coaching team. So now I'm going to host a couple of my own webcasts, one on technical analysis, one on options. I know the schedule will be out there soon, but I'm just happy to join the team since I've been working with them for quite a bit and excited to lead some of these classes too with all of you.
Well, I think I can speak for the whole coaching department in that we're thrilled to have you here, Rachel. Well, hey, everybody. Some familiar names in the chat. Glad you're here. As you have questions, feel free to put those in the chat. Mike Fairborn's there to help us out. Also, a reminder to everybody that the information today is for general informational purposes only. It's not an individual recommendation or personalized investment advice. And specific securities we use are just simply that. They're examples, they're not recommendations. Options do carry a high level of risk and are not suitable for all investors. And the paper money software application is provided for educational purposes only. And use it as such. Make use of it. I think it's a great learning tool, but that's all it is. It is an educational tool. Past performance is no guarantee of future results. Schwab does not recommend the use of technical analysis as the sole means of investment research. All investing involves risk, including the loss of principal, and virtual currency derivatives trading involves unique and significant risks. I think that's good. I think we've covered those pretty well. What are we going to do today? We're going to do what we do typically in this Trader Talks session, and that is we're going to look at the trend of, we'll start off with the trend of major market indices, and then we'll look at various sectors and some specific charts and just talk about the market and get you up to speed on the market this week, everybody. So we're glad you're here. This is the S&P 500. Let's start off with that. How about? So, hey, look, just to orient you all, I have a 20-day moving average and a 50-day moving average on my chart, red and green. And you can see the trend has been strong for quite a while since those April lows, continuing higher highs, higher lows, reaching new all-time highs on Friday. This morning, not a real significant change in the markets this morning. Any thoughts, Rachel, on what you see when you're looking at the SPX chart here?
Yeah, I feel like it's been a lot of the same. It's been higher highs, higher lows. We've had a strong uptrend here today, is forming really like an inside bar day. It can be like a harami or an inside day, just showing the compression of volatility and maybe like a pause in the trend or so. So, I mean, we're still pretty extended from that 20 period simple moving average. If I had to guess, like probably like 5-6% from there. So we may just see traders having a little bit of indecision at these all-time highs, but we're still quite a bit away from support there, Brent.
Yeah, we are. And so, when you get that distance between, as you mentioned, the moving average and that, when we've had it, let's just say kind of historically, when we've had it, when you get that bigger space, a lot of times it comes back down. And that's kind of a general flag pattern. Goes up and it kind of pulls back down. It goes up. This one was kind of an intraday pull down, but then we went back up. Wouldn't it be a shocker if in the short term we went down? Now, that doesn't mean there's a trend break coming at that point. It just means they were kind of maybe releasing some of the pressure in the market there a little bit, and a lot of traders will look for a bounce. Of course, we don't know if that's going to happen or not, but that is, certainly wouldn't be shocking. We've certainly seen that before. If we go to the intraday chart, you can see. I'm going to pull up those pivot points here for our intraday chart, and let me just zoom. Oops. Let me try that again. Let's zoom in. This is where we've started the day, a little bit below our pivot point. That's the purple line. We're just kind of skirting right along there. These are 1-minute candles right now. We'll see if we can break above that, which way it goes. Potential resistance here. If we break above that, then this, some traders would consider this a potential intraday target. But so far, not a lot of movement on the SPX this morning. And when we look at the SPX, just a reminder that roughly almost like 40% of the index is governed by 10 stocks because it's a market cap weighted index. So sometimes when you look at something like the SPX EW, the equal weight SPX, it will look a little bit different. And, the general trend has been going up. Certainly a lot of the movement in the SPX has been driven by the bigger stocks, but we do have some broader base strength in the SPX, as in the stocks of the SPX. Here's the percentage of stocks. This graph right here is the percentage of stocks that are above their 50-day moving average of the 500 stocks in the SPX there. And that is about 52%. Declining, so not, this kind of belies, this is slightly above 50%, but it kind of shows the difference between that strong trend we were seeing in the SPX as a whole and just how many of those stocks are above their 50-day moving average. And the answer is just barely above half. So definitely the market was or has been driven by some of the bigger names. We may be seeing a little bit of a change coming. We'll talk about that in just a little bit, but let's talk about some other indexes. The NASDAQ. So this is NASDAQ 100, roughly 50% tech stocks. Again, hit an all-time high on Friday. Again, today's candle, not much ado, really not much happening with today's candle. As Rachel pointed out, pretty good spacing between where the 50-day moving average and the chart is. Are you seeing anything? To me, Rachel, to be honest, this graph looks a lot like the S&P 500. What your thoughts on that?
Yeah, it looks a lot like the S&P 500. We still have like an inside bar today. So the range so far today, and market's only been open 8 minutes, but the range today is within the open and close of yesterday, forming that kind of pausing. But this may also give us hints to what could happen seasonally and what we usually see around like this time of the year.
Speak to that a little bit more, Rachel. What do we see seasonally? So when we talk about seasonality, folks, we say, hey, look, obviously there's a lot of different things that can happen in the market, and this is no guarantee. But traditionally, when we look at a certain time of year, sometimes there's stronger times of year, sometimes there's weaker times of the year. What are you seeing? What are you thinking right now about seasonality here, Rachel?
So this is kind of one of those times where we see that seasonal high of the year, and then we see a pullback typically like for a month or so. And obviously, seasonality is no particular strategy or recommendation or anything like that, but it's just kind of a good guideline to kind of look like on average what the market typically does this time of year. And usually we see that little pullback right around now. So I think seasonally, it just kind of makes sense that we have a little bit of pause, a little bit of indecision here at these all-time highs.
Yep, perfect. Um, uh, yeah, thanks for that. So that's the NDX here, and so what we said about kind of it shooting up and maybe reverting a little bit more towards the mean. Certainly no guarantees, but maybe the seasonality picture would tend to support that narrative on the NDX. Let's look at small caps. Small caps, so which have lagged the large cap indices for quite a while, hit an all-time high on Friday. You guess it. The major indices all on Friday hit an all-time high. And that has been a note because this has been kind of a dragger for a little while. But small caps may be more encouraged by the interest rate picture. We had the Fed lower the Fed funds rate by 25 basis points, also take a little bit more of a dovish posture, perhaps. Now, Chairman Powell will be speaking again on Tuesday this week. You may want to, kind of just keep your ears open for that and see what he says, because that certainly can affect the market. And there's some other data points we'll get on that could affect the market this week. But small caps tend to be more interest rate sensitive, and I think the lowering interest rates maybe has boosted small caps here a little bit, but you see a pretty strong trend in small caps there, similar to the other indices. Candle's a little bit different on this one, though. Not an inside day here on this one, Rachel.
No, it looks a little bit more like, I mean, obviously market's just open again, but it looks a
Yep.
little bit more like the close below the low of the high day
Yep.
type of setup here as after it made all-time highs. So a little bit more of a down move than what we're seeing with the rest of the indexes where we had that like kind of pause, that inside bar, and we're having a little bit more of a sell-off. Wow, all the way down to almost the support 2 level too.
Yeah.
Yeah.
So we'll see if we can hold support here and recover throughout the day, but definitely more bearish open on the small caps. In the chat, Jay Richardson, when is Powell speaking? I have him speaking on Tuesday. There is what I've showed on my stuff there. So also Jim said plus tax loss selling season is near. That could certainly affect seasonality. We don't really talk about taxes in this webcast. In fact, we're not allowed to, but I think we can mention that, and that certainly can affect people's decisions in the market. Now, I mentioned interest rates. Let's just take a look, because we mentioned that the Fed had cut the Fed funds rate last week. Let's look at the 10-year, though. Look at what happened on the 10-year. Hey, it went up. I think that's not a shocker because we've talked about this for a while. There's not a direct correlation between the Fed funds rate and what the 10-year does. Now, in general, if you look back historically, yes, there is an overall correlation over time between the two, but we've seen this the last couple of times. The Fed has cut the Fed funds rate. We've actually seen the 10-year go up, but it's like anything with data points. You probably don't want to put too much emphasis on any one particular data point. Look at the general trend, and the general trend of interest rates has been lower. We're down to about 4.1% on the 10-year. And keep in mind, this 10-year is pretty correlated to things like mortgage rates. It's pretty correlated to kind of just a general sense of corporate debt and corporate financing. And so this is why a lot of times in this webcast, we'll look at the 10-year as opposed to some of these others. We can look at some of these others as well. These are some of the other yields out there. So that's why we often kind of focus on the 10-year for that reason. And that certainly can, affect the market. Now, having said that, here's the 13-week. So this 90-day T-bill. What have we seen? Hey, it's a lower rate, first of all. We said 4.1 something for the TNX. This is about 3.87, okay? And this has dropped. So that's normal. It's normal for this to be a lower rate than the longer term. If we go to a 5-year, where are we at? 3.6, 3.7% on the 5-year. And what about the 30-year? Going out the real long bond here, 4.7%. So for the most part, we have a fairly healthy kind of positive yield curve in that regard. And the steeper that yield curve hits, the more typically financial type companies will benefit from that, just because a lot of financial companies will lend money. They lend money and they bring in money. They at different terms. There's a term structure difference, and they take advantage of the difference in those. So that's what we're seeing on the charts. Are there any other thoughts on interest rates here, Rachel?
Yeah, I think a lot of the same. I mean, last 3 times they cut rates, we saw rates move higher.
Yeah.
And I think the 30-year and the 10-year look pretty similar, where we're kind of closing in on that gap here. That's probably where we'll see that next spot of resistance. And we're kind of nearing that resistance of the 20-period simple moving average too. But the overall trend has been down. So we'll kind of see if rates turn the corner here and move up. But I guess, like you said, rate cuts don't always mean lower yields here.
Yep, absolutely. But it can affect things in the market. First of all, let me just mention a couple things. I don't want to dwell on this too long, but just 2 more thoughts on this. Lower interest rates can benefit companies with lower borrowing costs. That certainly affects things. And that's one reason the Fed will lower interest rates is, hey, this can kind of help boost companies. This can help maybe boost hiring, because that's the concern. One of the 2 main concerns I'd say in the economy right now is labor, the labor market. If it helps boost hiring, that can help support that. That's one effect of interest rates. Here's another thing, and this, I don't want to get too far in the weeds on this here, but it can affect company valuations. Okay, it can affect the discount rate that companies use and that investors use when they value companies. The lower the interest rate, typically the lower the discount rate. And what that means is we're going to lower the amount that where it can help ultimately us give more value to where the company is today if we have that lower discount rate and that lower what we call cost of capital for a company to endure there. So I don't want to get too far into that, but it certainly affects the market in different ways. And if we do look at, for example, on the FedWatch, this is a CME FedWatch tool. Current rate is this is in basis points, 400 to 425. About an 8% chance of it staying there come the October 29th meeting. About a little bit over a 90% chance people are looking at a 25 basis point cut. Now, the Fed has always said they're data dependent. We'll see what happens, but it seems very likely we're going to get 2 more cuts this year, everybody, in terms of interest rates. And of course, I mentioned, it is a little bit data dependent. Oops, let me go and bring up, I thought I had the, I guess I don't have that there. I was going to bring up the economic calendar from Schwab, but I'm not going to do that right now. I'm not going to take the time to do that right now, everybody. But let me just mention this. Tuesday, we've got PMI, both manufacturing and services, flash PMI. I mentioned Chairman Powell speaks. Thursday, we have final GDP coming out this week. That can certainly move the markets this week ahead. And on Friday is maybe the bigger number. That's the PCE. That's an inflation report. That's an inflation number. And that certainly is one of the big things that can certainly affect the Fed. Now, here's what I want to do. I want to take a look at sectors here in the market. And so what I'm going to do is I'm going to bring up this neat little grid here that I believe was originally created by Ms. Rachel Deshelle. And let's bring that up and let's just kind of look at some of these sectors here. So just to clarify everybody on this, this line is not the actual price of the sector. This is the relative strength of the sector. In other words, how is this doing compared to just kind of the S&P 500? If the line is going down in general, we'd say it's underperforming the S&P 500. If it's going up, we'd say it's outperforming. Of course, there's no straight lines here. Some are going to go up at times and down at times, but we're going to look just at the overall trend there on this. So energy, what do you see in there, Rachel?
I'm seeing a lot of underperformance, a little bit of lagging. And I guess the other important thing about these charts too is it's an easy way to see just rotation into some of these different areas of the market, because we're always going to have money rotating from sector to sector. And some of these that show relative strength are going to attract even more capital because you have asset managers, fund managers that want to outperform the index. And so when you have strength in one of those sectors, you're going to have more money, more capital kind of flowing there. And then especially like energy, for example, if we have like relative weakness, we're probably going to have more funds leaving that sector. So weakness in that area of the market there. And then if we kind of cycle through some of the next ones, materials, kind of same thing. There's been strength in pockets of materials because of like gold and silver. But overall, it looks like it's lagging too.
Yep, industrials have been lagging as well. But different story with consumer discretionary. Now, keep in mind, when you're looking at these sectors, it's not like every consumer discretionary. There's a few big companies, like maybe one you've heard of, like Amazon or Walmart, that may fall into this category here and have a much disproportionate effect on these sectors. But we've certainly seen a lot of strength in consumer discretionary of late there. Staples, different story. It's been declining for quite a long time. Probably not a surprise because remember, and this is about April where I'm pointing on the graph here. The market has been pretty strong since April, and generally Staples is a little bit more of a defensive sector, and it tends to do less well, put it that way, when the rest of the market is improving there. Healthcare, again, underperforming. Financials, not so great. Infotech, well, there you go. That's what, when we talk about some of the bigger sectors driving the market, and these are some of the biggest names you can think of there, like your Microsofts, for example, that drives this sector up here. Any other thoughts on Infotech or in Staples or anything there, Rachel?
Yeah, I think I know we talked about seasonality before, and this is like typically the time of the year that you see some more defensive rotation. We're really not seeing that yet. So while we may have a pause today, I mean, we're still seeing relative strength in more of those like cyclical sectors or risk on sectors like information technology and things like that. And I think that's what's carrying our index is higher just because of that concentration. We have over 34% of the S&P 500 in information technology. So while it's not so broadly spread, kind of when we looked at the equal weights, it's still lifting us higher. And even with communication services kind of falling in that same basket there, just making relative moves higher, attracting more capital.
Yeah, and communication services, think of your Metas of the world that fall in like the communications category, some big companies that you're aware of. Utilities has been dropping. Again, more of a defensive sector typically. I mean, in theory, there's a lot of different forces that can affect these. Lower interest rates could potentially help utilities out, but I think it's a lot of times it's just a choice of where people's money goes. And if you're seeing bigger returns in some of these real cyclical sectors like IT or communications, then it's being taken from some of these maybe more defensive sectors like utilities there. Let's see, we got one more. Real estate, not looking spectacularly there on that one, I guess. Final thoughts before we move off sector performance there, Rachel?
I think one of the things is that there's always places to find strength in the market. I think this relative strength ratio analysis is kind of like one of those first steps that you can use in your research process, kind of like from that top-down approach. And then you can look within those various sectors using scans or other signals or things like that to look for those other areas or pockets of strength.
Yeah, and for those of you who are watching live, I put a link to that grid if you want it in the charts, in the chat. And if you're watching on a recording, here's you can just pause the recording and just type this in, and this is a way if you want those charts, by the way. Exclamation point XSUKSUOV, and they are case sensitive, so you'd have to capitalize the X, the K, the S, and the V there. Okay, let's move on, folks. Let's hit up what's happening in terms of coming out with earnings in the market this week. Let me go first of all, real quickly though, just to a prior point here on this. Not sure why. Where'd my S&P 500 go here? But to the point of non-equal representation of different sectors here in the market, this is just the NASDAQ, but you can see roughly half of the NASDAQ is information technology there. Okay, and then another quarter of it basically is communication services. So you can see how you get this unequal representation. Let's look at earnings calendar, then we'll look at some other asset classes here. Everybody, calendar. This is just S&P 100 earnings. Today is September 22nd. We've got, did we have Meta this morning? That's a dividend. Never mind. Okay, let me get a dividend. Let me go back to earnings here. Yeah, I was a little surprised to see that. Not much in terms of the S&P 100 this week. Let me just change this to the S&P 500 and see what we got. Tomorrow, looks like AutoZone tomorrow morning. Micron tomorrow afternoon. Wednesday, Cintas. And you can go on down. There's some others there. What biggies? Costco is probably the biggest one this week, it looks like to me. They're coming out on the 25th. I'm not sure what day that equates to. That's probably Thursday. We've got Costco earnings. So those are some companies that are maybe to keep an eye on there. We're not in earnings season yet, though, folks. We're going to get, at some point, we'll hit the end of the quarter, end of September, then give it a couple weeks, and then we're going to start to hit bank earnings and a whole bunch of different earnings there in the markets. Okay, let's look at some other asset classes here. Let me go back to my regular charts and let us look at, for example, gold. Am I not linked? I'm not linked. Let me just link that. Oh, because I pulled up the different grid. Okay, here is gold. Rachel, what are you seeing on gold?
More new all-time highs. Gold just continues to chug higher and higher, and I mean, it's in something that's outperformed even the indexes this year. It consolidated for quite some time, almost like creating like a big ascending triangle pattern, and then it broke out a couple weeks ago just with immense strength there, and it's been one of those that's also extended from its moving averages as well, but it just continues to move higher. So there's been a lot of momentum in that space. Same with silver as well, and some of those other commodities
Yeah,
in the
here's the
metal space.
ascending triangle Rachel was kind of referring to there. We broke out of that. A lot of strength on gold, and this would hold true. This would hold true for a longer term chart as well. Here's the 3-year on gold, just going crazy. Really strong on gold. Whether it's kind of a flight to safety type instrument or concerned about inflation, there's different reasons people will go into gold, diversify a portfolio. That's the 3-year on gold. Let's go back though and look. You mentioned silver. Here's silver. A lot of strength on silver too. And so all-time high. I think that's all-time, isn't it? On silver. Yeah, there's
Almost.
all-time high on silver. Uh,
Almost. If you zoom way out, if you go to like a max monthly chart, you'll see it's a massive cup and handle pattern that's forming back from really from, and this is just the handle of it. But if you go to max monthly, it's like a big cup and handle from the 1980s.
Let me see if I can, let me just change that to monthly here and see what we got, if that'll give us, yeah, there you go. So that's a good like little user tip maybe here, Rachel. I pulled up a max weekly and it only went back, I didn't see how far, but 20 years or something like this. If you change the interval of this, because we don't have the week, there's no weekly data. We don't have the weekly data if you go way back. So if you switch to max monthly, you can see as you look back farther in time, what we got there. And so big moves there. That's silver. Let's look at gold here and look at kind of the same thing. And there is a difference between the two. I mean, gold is primarily just a precious metal. Silver has more industrial applications, but either way, there you go. And if you do look at gold, I mean, gold has a way of going real strong and then kind of lull for quite a while, and then real strong, lull. We've gone real strong. I don't know how long that the strength hasn't ended yet. It seems like I don't know what's going for up to today. The strength hasn't ended. I don't know what the future holds on this, but wouldn't it be surprising if at some point when this ends, if it does what it's done in the past, it may take a breather for a few years, perhaps. I don't know. We'll see on that. I'm not sure what's going to happen going forward with gold, but I think it's an important chart to look at. Let's look at oil here. Here we looked at the energy chart before, and I don't want that. We'll go a little shorter term here. Here's oil, and what are you seeing on the oil chart there, Rachel?
It's definitely, price has been coiling right around this like descending triangle here. And I almost wonder if it's a volatility compression at the same time. So maybe we had some Bollinger Bands or implied volatility onto this chart too. But typically when you see price coiling kind of forming a triangle there, it shows that there's just that strong battle between the bulls and the bears. They're just pushing price closer and closer towards each other. And so a lot of times you're getting like a little bit of a squeeze. And we may see a breakout on volatility from either side of that. Right now, it looks like it's touching the lower end of that Bollinger Band as it's kind of also hitting support of that descending triangle too.
Yeah, that's a good call out. You can see this on the Bollinger Bands, and I'm hoping you guys can see it. Here's the upper end of the Bollinger Band, this kind of red line. Here's the lower end, and you can see at times they're wider, and at times they compress. Here's a compression on the Bollinger Bands. Here's a compression on the Bollinger Bands. Here was a compression on the Bollinger Bands. And what happens is you get this period of compression, and then typically what you see is it breaks out. Now, it may break out to the high side, it may break out to the low side, but often what we see is at some point it will break out, and when it breaks out, it can move quite a ways right now. And so we've seen oil prices kind of are, well, a little weaker right now, which, you know, if you're filling your car up at the gas pump, that may be a good thing. You may like to see that, but just realize that, you know, there's concerns maybe about oversupply for some, you know, on some fronts, and in the oil industry at least, I guess. From the consumer, that's a great thing because it helps lower costs for you and me, but also businesses, and it can certainly even help the inflation narrative a little bit, which is what we want. But that's certainly, you know, things that can change this would be, you know, more geopolitical tension could certainly spike oil prices there, or you know, there's just factors both on the supply side and the demand side there on oil.
Yeah, and the other thing about this too is I always like to kind of, I mean, when we're looking at price kind of compressing, looking at volatility, I think the thing to keep in mind is volatility is mean reverting. So when we have periods of low volatility, they tend to switch to higher periods of volatility, and vice versa. So this could be something where we could see an impending breakout here soon, depending on what rates are doing, depending on geopolitical tensions, like what you mentioned, Brent.
Yeah, and so here's the implied volatility chart on this, and you can see it kind of, you know, because EKG vibes maybe or something like this, but you got it blips up and then kind of blips up, and we haven't had much of a blip of late, and so that's where you could see that spike up in implied volatility and movements on the charts there on that. Let's see. Let's just check up some questions here. Beauty at its best. If the SEC votes to move earnings reports, okay, so just to inform everybody, there is discussion of changing companies' reporting requirements for earnings from quarterly to semi-annually. It appears the president is in favor of this change. There's a lot of other people in the industry that are in favor of that change as well. It needs to be approved by the SEC there before. So that has not happened yet. Would that affect the usage of options since the data could be delayed? Well, it certainly would delay updated information about the company. People are still going to be trading options, but what I think you may see is you may see more companies, and this is just speculation on my part, folks, I don't know this for sure, but you may see more companies issuing guidance between those quarterly reports, well, if they became semi-annual reports, and the market reacting to that guidance a little bit more instead of the more frequent quarterly reports. So I don't know, we'll see how that affects, but I think you'd still see plenty of people trading options at that point there. Okay, let's keep moving here on this. Let's look at Bitcoin. Now we're just talking about the price of Bitcoin. We're not talking about trading it. We're just talking about the price right now. Bitcoin's off a little bit today. In general, just in general categories here, Rachel, thoughts on crypto in the market and the price of crypto and the chart, perhaps?
Yeah, it's kind of interesting because usually Bitcoin was more correlated with like the tech sector, and we're seeing kind of a divergence here where Bitcoin's kind of leaning a little bit lower, it's kind of stuck in this range over the last few months while tech kind of chugs higher. So wonder if there's some rotation within the crypto space, moving out of Bitcoin and maybe into some other pockets or areas of the crypto technology, or I guess cryptocurrency
Yeah.
kind of area. But it's kind of a lot of the same here over the last couple months, just kind of stuck in that range, probably starting around that $110,000 level that we saw was like May and June highs, and then those recent August, September lows.
Yeah. So kind of a potential resistance back here, but once you break through it, then it kind of becomes a potential support level, which is kind of, forgive my inaccurate drawings here, but that is kind of a potential. This would be kind of a key area if we broke below that and stayed. I mean, we did break below it for a day, but it promptly resumed right there. So we'll see certainly a flattening in Bitcoin. And as you mentioned, this certainly is not the only cryptocurrency there. And we just kind of traditionally, because it's been the biggest, we've used it as a proxy to just talk about crypto as a whole. But there is more, to your point, more to crypto than just Bitcoin. Dom said it's channel bound. Yeah, kind of in this channel right here, right now, is where we're at, I would say. And, kind of up here, we'll see which way do we break first. I don't know the answer to that one there. So, okay. All right, let's see. We talked about the calendar, we talked about the economic calendar, we talked about the earnings calendar, upgrades and downgrades, and then we got to wrap it here. Some major upgrades. Applied Materials had an upgrade by Morgan Stanley here. You can see Applied Materials. This is a chip manufacturer. They don't directly manufacture chips, but they're a chip equipment manufacturing company. So related to the chip industry. Quite a takeoff here on Applied Materials, Rachel. That was an upgrade. Overweight to equal weight, to overweight from equal weight, with a price target of 209 from 172. Thoughts on the AMAT chart there, Rachel?
Yeah, on this one, I actually zoomed out a little bit further to like a 3-year, and it's forming a massive inverted head and shoulders pattern there. I guess starting with last October being like starting that left shoulder, we had the head going into April lows, and then we had this right shoulder start, I guess, a little bit. Yeah, there you go. That right there would be the head, and then this is the right shoulder that's forming right now. Yep, there you go.
There we go. So if we were to break above this, that would be a pretty significant break on that, which would be a very bullish sign, by the way, if you didn't pick up on that. So we'll see. When you talk about head and shoulders and other price patterns, really a lot of times they come down to like support levels and resistance levels, and that's what we have right here. This would be kind of a resistance, but it'd be a very significant resistance. Some traders, in terms of coming up with a target, and it doesn't mean the stock's going to go up there, but just kind of coming up with a target, they'll measure the distance here from here to there, and then they'd add that to this and kind of come up with a potential target there on that. So
they're all-time highs.
yeah, and that would put it right up above there. So yeah, so that's a significant upgrade, I would say, in the market. ASML, another upgrade to overweight from equal weight, ASML, and you can see the stock reacting very strongly on that. And in terms of major downgrades, Lennar, this is a home builder. Lennar selling off on that. Raymond James downgraded Lennar to underperform from market perform there. And that's about all we have time for there, Rachel. Let me just mention a couple things here. One, remember, follow us on X at Brent Moore CS, at Rachel-CS, and at Mike Fairborn CS. I think I failed to mention Mike. Mike's helping us out in the chat today. I appreciate you greatly, Mike. And so make sure you follow Mike on X. He posts some great stuff throughout the week on there. And there we go, everybody. That's we're starting a new week. Rachel, thanks for joining me today.
Yeah, thanks for having me, and thank you all for tuning in.
All right. Hey, everybody. Thank you for taking some time out of your schedule and joining us. Thanks for your questions in the chat. I know we may not have got to all of them, but I know Mike has been helping out a lot in that realm. And coming up, just make sure you stay tuned and check out the Trader Talks channel and subscribe to that to see what other webcasts we have. So everybody have a great week ahead. We'll talk to you later. Bye-bye.